Good morning, everyone. We will begin in just a few moments. All right, good morning, everyone, and thank you all for joining PCR SBDC as we are here today to talk about financial fitness. Woo, everybody should be cheering. This is actually Financial Literacy Month. And so our role is to assist you in being as financially strong as possible as a small business. And some of that starts out with personal finance as well. And so we'll be covering a little bit both today as we review credit casualties. We do not want anybody on this call to ever be a credit casualty. So we're covering credit casualties, the impact of credit on your business with our partners from California Bank and Trust. So we are excited to have you all here today. Thank you for joining us. You will be able to ask questions on today's call. Please put them into the chat. Use the chat box for that purpose. And if you would, we like seeing your smiling faces. So thank you, Kevin and Tyrone, for at least letting us know that we got real people on the call today. Appreciate seeing you all. And if you would, though, if you need to get up and move around, just put your phone and your video on hold until you return, just so that I don't get dizzy. So with that, we're going to go forward. Some of you all have met me virtually this year on some of our other calls. I'm Colette Moore, and I'm the director of PCR SBDC. And I actually was a past business owner and a client of PCR SBDC, where I received great instruction for a franchise staffing business that I held. I was a good client. I was a bad client. I want you all to be the best clients that you can be, learn all you can, and apply all that you can. And we have a great staff of advisors and a great administrative staff. Some of those will be on the call today, in addition to China Spikes and Briogeny Sanders, who are on our team and helping to make sure that you guys get all the information that you need. So for those new, though, to the SBDC, it's 1,000 centers in the U.S., and these centers are helpful in economic development. We're a proud sponsor or partner with the SBA, Small Business Administration. And then also the state of California, GoBiz is a major funder for our program. We're providing business consulting. So that's the one-on-one consulting that you guys do with our advisors, training like this. And then every week we're doing ongoing training and then resources to assist you, including many of the new programs and that we have as part of our center. The other thing is that we created during COVID a financial fitness program. And we're so excited. Today's session is part of that financial fitness core program because we realize that small businesses really need help preparing to access funds and to build financial muscle. So that's part of what we're doing, is to help you all to build financial muscle. We have a cohort program. I'll talk a little bit more about that. One-on-one consulting. For those that may not know, if you need help setting up your records, we have a QuickBooks specialist and also several financial specialists in this area. And then the ongoing workshops. So at our last session, Take That to the Bank, we ran a survey and you guys shared workshops that you thought would be really helpful. And credit was one of those. And so today is a follow-up to what you suggested to us might be helpful as you pursue your business and go for business success. For those that are interested in the financial cohort, it is a year-long program where we start out with 4 financial workshops, all focused on key financial records, balance sheet, income statement, cash flow, financial analysis, how to better run your business because you know your numbers. You all hear me, know your numbers. We all need to know our numbers so that we can be successful. It includes also record setup, and then we also do an assessment for that cohort. For those that are interested in the cohort, the next one starts June the 9th. Our cohort leader here is Chevy, who is just Dr. Chevy, who has just come on the line. And then also Leonard Tangway is the other advisor that works that cohort. And so we look forward to having you guys participate, and CBT is participating with us in that cohort as well. So I am so excited though. Today we've got some banking specialists in the house. Wayne Ward has worked at California Bank and Trust for 14 years. He was selected in 2020 by the Los Angeles Business Journal as one of the 500 most influential people in LA. Don't you all want to meet people like that? So say hello to Wayne. You can say you met him today on today's call. Wayne is currently the Senior Vice President and Regional Manager of GCS West Region, and he manages 13 service banking centers, business banking centers, and 1 loan production office throughout West LA, the South Bay, downtown LA, San Fernando Valley, and Santa Clarita Valley, and with over 35 years of experience. So welcome to Wayne, and thank you for working with us to coordinate today's session. We also have Lou Mures, and he's been in commercial banking in the LA area since 1984, and he's been with both regional and independent banks. He currently serves as the business center manager for CBT in Culver City since 2000, and he has extensive banking history with small businesses, professionals, nonprofits, and investors. Wave at us, Lou. And Lou is one of our speakers here for us today. And then finally, from the California Bank and Trust team, we have Tracy Chen. And Tracy has been a business banker for more than 17 years and worked with entrepreneurs and operations as small as one-man shops to international companies with manufacturing plants and subsidiaries in multiple continents. There's nothing more fulfilling in her career than assisting clients and helping them to achieve their dreams. So we are so excited. But before we get to our speakers, we're doing one thing. We want to do a quick poll. And as we're doing the poll, I just wanted to mention another thing. We do have prizes at the end, so we hope that you will stay. And we do have a handout for this presentation. This presentation is being recorded, though I don't see that. It is about to be recorded now. And this will be available for all that registered for today's session. But please stay because we do have some prizes and we are excited that you all are able to participate. So, but put your pencils and pens together and make sure that you take some good notes, even though we do have a handout, you can help with your questions. So we're going to start with a poll. And the first question here is, and they're going to be, the first question is, have you ever applied for a business credit? So answer choices: never applied, have applied but haven't received funding, and been in business for 3 years and have received funding. So please, all of you, take a moment to answer this poll. Let's see where we stand as a group. All right, 10 seconds. Thank you for putting in your information. All right. Almost everybody. Let's finish up those last ones. All right. And so we are set. So the results are being shared. So a really wide range of folks here on the call that have not applied yet. And that's one of the things we want to help you to do, is to be prepared to apply for business credit. And so, because it can help your business to grow and to expand. So that's a key area for us. If you have not applied, and we've said for any of you who have been on any of the COVID calls, we don't want you to disqualify yourself from anything, but get prepared so that you can apply. And then 7% have said that they have applied but haven't received funding. So how can we assist you there? And then others, 25%, I'm sorry, 25% have also hadn't received but applied. And then 25 have said that they've been in business and have received funding. So that is great to hear. We want you all to be able to get the money that you need for your business. And we're excited to have California Bank and Trust to start that, help us in that area. So with that, we are going to turn it over to Wayne Ward, one of the most influential people in LA. Wayne, it's all yours. Thank you.
Thank you, Colette. Good morning. And thank you, PCR, for allowing us to be with you this morning. Thank you for that nice introduction. Let me tell you a little bit about us. California Bank and Trust is a $15 billion financial institution, and we're a business bank. We have nearly 90 branches helping Californians and their businesses grow and prosper for more than 60 years. We don't have a branch on every corner like traditional consumer retail banks that you see in your neighborhoods. We're headquartered in San Diego, with offices from San Diego all the way north to Sacramento. As Colette mentioned, I manage 14 business centers known in the West region is from Long Beach all the way to Oxnard. And we also have a branch on Crenshaw Boulevard, which is right down the street from West Angeles Church. We've been voted best bank in San Diego for the last 10 straight years, and we have been voted the best bank in Orange County for 7 straight years. We're also recognized as a favorite bank in the South Bay Torrance metro area. Our parent company, Zions Bank Corporation, is one of the premier financial services companies with $80 billion in assets, headquartered in Salt Lake City, Utah. At the enterprise level, we have 11 affiliates from Arizona to California to Colorado, Idaho, Nevada, New Mexico, Oregon, Texas, Utah, Washington, and Wyoming. We are a national lender in the SBA, known as Small Business Administration. We also do public advisory services, and we are every year one of the top recipients for Greenwich Excellence Awards in banking. We are deeply committed to our communities. We want to provide the financial solutions to our small businesses that deeply need it and deserve it. We also have local roots in your communities. We're also one of the biggest supporters and contributors to the Junior Achievement Finance Park. Many of you may have heard of Junior Achievement. It's known for financial literacy to young people of all ages, particularly students with low to moderate income areas. I have an announcement to make also. We have a deep commitment to serving small businesses with financial education, just like today with this webinar, so access to capital can be easier to obtain. In the coming weeks, Zions Bancorp, along with CB&T and all of our affiliates, will be launching a small business diversity program, a special purpose credit program available to women, minority, and veteran-owned small businesses. This program is expected to go live in May. We are one of only a few banks in the country that created this special purpose credit program under the laws of the Equal Credit Opportunity Act, which is designed to help historically disadvantaged group of small business owners. The program is called the Small Business Diversity Banking, and we will leverage our traditional business loans and lines of credit, and the credit guidelines will be modified to enable greater access to credit for women, minorities, and veteran-owned businesses who have struggled to get bank financing. The loans will be tiered from less than or equal to $50,000 all the way up to $250,000 in size. The overall program at the parent company level on down is expected to grow to 200 million in loans granted within 2 years. We are excited that you have joined us today throughout this webinar to hear this news firsthand, and I encourage many of you to take advantage of this program. So we appreciate the opportunity to share our knowledge and our experience, and we look forward to your feedback today. There will be more events like this throughout the year. I am joined today with two of my colleagues. Lou Merez, who Colette mentioned earlier, is a 20-year veteran in banking and has been with California Bank and Trust since 2009. Lou is first vice president and manages the Business Center office right here in Culver City, right here at Corporate Point, which is off Slauson and Buckingham. Lou is also a member of the loan committee with Pacific Coast Regional Center for many, many years, so he knows you very, very well. I'm also joined today with Tracy Chen, who is Vice President and Senior Relationship Banking Officer at our Santa Monica branch, which is located at 100 Wilshire Boulevard in Ocean. Tracy also has 20 plus years of banking experience and has been with California Bank and Trust more than 10 years. So I will now turn it over to Lou, who will talk to you about business credit. Lou?
Wayne, thank you very much. Really eager to be here with all of you today. I'm going to talk a little bit about the fundamentals of business credit. Definitely take your notes, and we'll be anxious to take any questions you have that relate to your specific businesses and circumstances. So let me kind of move through the next couple slides here. So first of all, why is business credit so important? There's definitely the obvious component that your credit profile is going to be important, when you need to borrow money. I think in the bigger picture, what I'd like to impart to all of you is that business credit is really how the outside world sees your business. There's so much information today online about every business. And again, a lot of it is not accurate. That's really a challenge today. There's all sorts of companies and individuals that will go online, look at things about your business, about your background, and often this will be completely unknown to you. This can be customers, suppliers, creditors, all sorts of folks. And they're going to judge pretty much, what they see, and may not have the opportunity to talk to you about it. And that's really why your credit profile is so important. It's really broad. It's about any person or company that your company is paying, any company or individuals that your company relies on, and anyone that influences the reputation of your company and your industry. So that's really why business credit is so important. So the next topic is that I really want to challenge you all on is to adopt the mantra that business credit is really an ongoing process and a commitment that you need to adopt. I think we all agree, going to the dentist, going to the doctor is important maintenance in our life. And really business credit is much the same thing. It's something you want to check on periodically. You want to look for errors. There's continually little things that you can do to improve and bolster your credit, not just when you need money, but really at all times. And really the concept is pretty simple. It's before you make a commitment, be sure it's one you feel you can honor, pay your bills on time. And sometimes things, unexpected things do happen. I mean, we've been through a pandemic. We all know that there are issues, but if there are issues, be proactive and get ahead of them. Those are really the basics of the credit commitment process. The one thing that I've seen in many years with our clients, the ones that are really good, that we really trust, they're really fanatical about their credit background and checking it. And I know many of you are emerging businesses. That's really something I would encourage you to all adopt as you move forward. So let's talk a little bit about selecting a bank and a banker. And that's, I know, a topic of a future presentation. So this is going to be a little bit general, but a bank is just like any professional, like your attorney, your accountant, your insurance. These are important professionals that are a part of your team. And it's really something you need to think about before you need money. I saw 50% have not applied yet. So this is certainly very, very appropriate. So selecting a bank, that is a complicated thing, and I'm not going to spend too much time on that. It really depends on the nature of your business. And that, again, that's a future presentation. But I do want to say is many people will kind of just look for a bank based on convenience of location. And if you think about it, if you have an issue and you need a doctor or an attorney, you're going to try to find the best one regardless of location. And so much of what we do in banking today is not really based on people coming into the bank. So you want to find the bank and the banker that fits you, regardless of where they may be located. And we have kind of a saying, and it's really true, your banker is way more important than your bank. Everybody, every business, small or large, really needs a go-to person. And the traits of that go-to person is somebody that's accessible, somebody you can trust, somebody you can relate to, and somebody you feel like is really going to be your advocate within the bank. How do you find this person? Sometimes it's not easy. Sometimes it's trial and error. But kind of the time-tested ways of people and you do that do business with you, who they know and recommend, that's still the most powerful method. You all have banks right now. Your banks, I'm not advocating that you change banks, but if you don't have somebody within your bank that you really feel is your quote unquote banker, I encourage you, seek out someone, build a relationship with someone at the bank. Bankers change. Sometimes it's hard, but again, it's part of that process that I talked about. It doesn't necessarily have to be someone at a high level, but it just has to be someone you can relate to and you can call your banker. Really, really important. Okay, so proactivity of and transparency of communications with all your creditors, not just your bank. If there's one takeaway from today that I would really stress you all embrace, and this is absolutely the number one thing I'm going to talk about today. All of you run your business, you know how stressful it is. You don't like surprises. Creditors are exactly the same as you guys. We don't like surprises. If there's some issue you feel that's going to impact your credit situation with any creditor, be upfront with it. Tell us about it. If you're proactive, that'll build trust and respect. Today's world, we all know there are no secrets. So again, kind of taking the position, gee, I hope they don't ask about this, or I hope they don't find out about that. Don't fall into that trap. It's better to disclose something voluntarily, get ahead of it, and that's going to build trust and long-term relationships. So communication, communication, communication. Okay, so let me move on to some of the different forms of creditors. This is important. I'm going to spend some time on this. So kind of picture this little chart here, almost like an upside down pyramid, with the starting at the top being the wide part and the bank at the bottom being the top. So most people think, wow, I need some money, I'm going to go to the bank. It's the bank, and they think about the bank first. Actually, the bank is typically your last stop and where you go after you've been through some of these other steps. So that's really kind of what I want to cover. So let's talk about suppliers first. Suppliers is typically the easiest form of credit. Why is that? Your suppliers are selling you a good or service. They have a vested interest in giving you credit. So that's typically where you start. One way to build is after you've been with the supplier for a while, ask them to be a little more liberal, or just get a backup supplier and see if you can open a little credit there. That's really the entree or the starting point to the credit process. Credit cards. We all have credit cards. Everyone knows that credit card is very much a double-edged sword. Credit cards are fast and easy to access, but again, using them for business credit can be dangerous. It books up your credit and can affect your FICO score and stuff like that. So credit cards, it's easy to say don't use them for business, but we really can't say that because it's going to be available and necessary. So I think the bigger point is use them judiciously, keep track of it, And if you use your credit cards, try to make it short and don't have them linger for a long period of time. But again, it's necessary, it's easy, use it wisely. Kind of the same thing, friends and family. I mean, nobody wants to go to friends and family for your business, but it's usually the number one way that people get started. Those are the people that trust you and believe in you, and generally you got to use them at some point. I think the greater message is, again, try to have a plan to migrate off that, and don't overpromise. Those are important relationships. So be honest about how long you think you're going to need it. And it's always better to, kind of under promise and over deliver, as we say. But that's friends and family. Finance companies, private lenders, there's a whole array of those. And they're definitely not bad. I think at one time, there was sort of considered a stigma that if you were dealing with these type lenders, it was bad. Not really the case today. They're a very big part of the credit landscape. These type of lenders are often more flexible than banks. They can often be easier to qualify with. They will tend to rely more on collateral, whereas banks will tend to rely more on income. Again, they're more costly, but sometimes that's what's available. In certain industries, most of the credit is done through finance companies and private lenders. Actually, of total credit to small business, banks is really a very, very small portion, and not everybody realizes that. So you guys are all fans of PCR. You understand about government programs and small business development centers, and programs through PCR are great. Costs are moderate. They help you with it. And that's really those type of lenders are the gateway. You're almost at the banking level. They're getting you there, to absolutely take advantage of stuff that PCR and other organizations have. Those are jump starts. After you've gone through this pyramid, you kind of get to the top part, you get to banks. Banks is typically the most premier form of lender. It's the cheapest and the best, but it's also the hardest to get. The reason why banks are difficult is because we're intensely regulated and we lend depositor money. So we have to be super careful. Typically, the first time you apply with the bank, you may be declined. The biggest and most successful companies were all declined by banks. It's part of the process. So don't take it personally. It's part of the building process. So that's, again, you start off at the big part of the pyramid and you work your way up to the banks at the end. So let me talk a little bit about trying to demystify how banks evaluate loans. It's really not a complicated process. So typically, most banks want to see you're in business at least 2 to 3 years and that you've been consistently profitable. Now, what's happened over the last decade in our industry, most smaller loans today are done through some sort of automated or semi-automated process. And they're going to use some sort of algorithm, which is based on things like how long you've been in business, the personal credit background of the owners, what your bank balance is, what level of debts and payments you currently have, things in public databases, stuff like that. Generally, there is a human component as well for exceptions and overrides, and that gets back to why your banker is so important, because if you have someone that knows your business, that can intercede, you have a much better chance, somebody that believes in you. But the scoring process can definitely be frustrating, and it's not the most personal, but because of the cost of delivering credit, most banks are doing this for smaller loans today. So the one thing that we all as bankers have learned, and I'm sure you've heard about it in some of these educations, is that character is the number one thing. Now, obviously, scoring processes don't meet you and they can't evaluate your character. And again, that gets back to why your banker is so important. They can. The surrogate in these models for evaluating your character is the personal credit background of the owners, as well as things that are on public record. The model doesn't know what the reason for these things are. It just sees the existence of them. So that's why, and Tracy's going to talk more about this, why the personal credit background is so important. There's always kind of a misnomer. People will say, gee, banks will only lend you money if you don't need it. That's not exactly correct. I think the way to say that is banks will loan you money if you can demonstrate how you're going to pay it back. That's really the essence of applying. It's simple. And again, as a bank, we rely on income or cash flow, and that's based on what's on your tax returns. And if you can show us historically that you've generated the necessary income for your loan, you're probably going to get your loan. It's pretty much that simple. Again, it's always good, particularly in today's world, you want to be proactive. When your business is at a good situation and you may not need credit, that's a great time to apply. Obtain a line of credit. You don't have to use it, and it's a contingency for the future. That's part of that whole process and planning your credit process that I talked about. So let me talk a little bit about Dun and Bradstreet reports, business credit reports. There's kind of a misnomer, I think, that there's a lot of heavy duty analysis being done on you by companies like Dun and Bradstreet. Definitely not the case. What these reports typically relay is what you as the business tell them. They'll generally call you once a year. Now, if they get you as the owner on the phone, you're probably going to do a good job of telling them what your business is about. If they get someone else on the phone, you don't know correct. So you want to look at them and see what they say periodically. Once a year is a good guideline to check your Dun and Bradstreet report. Typically at banks, we don't place a lot of reliance on these reports. We use them for general background information. They're beneficial in terms of checking public records and things like that. But again, it's not something that we place huge reliance on. I think suppliers, where really nobody knows you, where you may be applying the first time, very much used in that context, but not as much by banks. Background checks are definitely becoming more prevalent today, particularly as you get into larger loans. There are many databases that banks will run you through that you may not be aware of. And that's, public things like liens, judgments, lawsuits. Those things have a big impact. And without your explaining what it is, they stick out. So it's really important to know what you have on public record. And if things are wrong, you really want to get ahead of it, particularly when you're applying for credit for the first time. Okay, let me talk a little bit about credit modifications. And that's something that became definitely very commonplace during the early months of the pandemic. This is getting an adjustment for deferred payments, change in payments, change in rate, having more time, stuff like that. Generally, banks are not going to advertise that credit modifications are possible, but they most definitely are, particularly during challenging times. As lenders, we would rather modify a loan and try to help you than have a problem. There's no stigma, there's no reason not to ask for help. Generally, as a guideline, if you can't, maybe for some reason you can't get a new loan, if you can get relief temporarily on existing loan through a mod, that may be the next best thing for you. These can be positive experiences that will not be held against you. As long as you make a deal, you stick to it, and you communicate, that's really the essence of having it be a positive situation for you. Okay, let me talk about the pandemic. Fortunately, where things are getting better over the last 30 days, credit is definitely loosening up, but the pandemic has really had an impact on tightening credit. It's made it much more difficult, particularly in certain industries. Kind of the whole essence of what we look at, again, is pretty simple. If you've done something in the past and you've made money, we assume you're going to continue to make it and pay your loan back. The problem with the pandemic is it's fundamentally changed some industries to where that whole notion of relying on the past may not necessarily work. And that's why it's so tough now with industries that have really been hurt. So anytime you apply, even as things get better, lenders like banks are going to be asking you what happened to you as a result of the pandemic. How did you adjust? How did you react? And how you explain that in a very articulate way is going to have a big impact on whether you're successful or not. There were a lot of forms of help during the pandemic. And again, I think banks recognize and respect people that took advantage of those help. If you got a PPP loan, that's something that strengthened your business. If you had it forgiven, then it's behind you. If you've maybe gotten the second stage and it's not forgiven yet, the bank will ask you to demonstrate that you are going to have the necessary payroll and other costs to have it forgiven. And as long as they can see that likelihood, that debt will not be judged as a debt service in your new application. So you just, again, be proactive and explain that process when you apply for credit. You're going to be asked about it. The EIDL loans, generally those loans were pretty small. Generally, the amortizations of those loans are large or small, so they won't have much of an impact on your situation. But yeah, definitely cheap money. If you were able to get that, it definitely will not impact you. Grants, again, not many of them were out there, but if you got a grant, most lenders look at you as being proactive and are very happy that you got that. So all those things are definitely good things. So with that, let me kind of turn it over to Tracy. She'll talk a little more about personal credit, and then I'll come back at the end of it. Thanks.
Thanks, Lou. So now let's take a look.
I'm so sorry. I muted Tracy by accident. And Tracy, please you're not on screen anymore. So sorry.
That's okay. Thanks, Lou. So now let's take a look at some fundamentals of personal credit. We're going to talk about establishing your personal credit, monitoring, managing your personal credit, and just in case, if you happen to be in unfortunate situations, what can you do to repair your credit? And lastly, we're going to look at personal credit from the lender's perspectives. So first, let's talk about establishing your personal credit. Why is that important to you? Well, personal credit would offer you additional leverage and flexibility. For example, when you need to make a large purchase, but you do not have sufficient amount of cash on hand, additional credit can offer you that extra room that you need to make that purchase. It would also allow you to make small increments of repayment over a period of time. So where do you establish personal credits? I would first highly recommend you to look up your local financial institutions, such as credit unions, local banks. You can also try online financial institutions. For example, American Express has very competitive offers on personal credit as well as term loans for long-term usage. Then what are some personal credit products that you may want to consider? Credit cards, credit lines, both secured and unsecured, auto loans or lease, home mortgages, home equity lines of credits, home equity loans, and also investment line of credits that are secured by stock portfolios. When is the best time to start building your personal credit? I would recommend you to start building your personal credit as early as possible, perhaps while you're in school or freshly out of school. And there's a reason for that. We're going to talk about it in a little bit. Now let's look at the ways and why you want to monitor your personal credit. I'm sure you're aware of the increasing number of fraudulent cases and identity theft, especially under the pandemic in the past 1 year. It's important that you look at your personal credit reports at least once a year. And that is one of the best ways for you to monitor any unauthorized activities or incorrect information associated with your social security numbers. Sometimes you may find unauthorized credit inquiries done by companies by mistakes, but sometimes they were done intentionally for fraudulent purposes. And therefore, it's important for you to do these type of monitoring at least once a year, but perhaps it'll be the best if you can look through your credit reports through credit monitoring services on a monthly basis. How and where do you monitor your personal credit? Most credit card companies and also banks nowadays offer free credit monitoring service. They're free to you. All you need to do is just sign up. You can also obtain your annual credit reports free of charge from each of the 3 credit bureaus on annual basis. And the website to obtain that is www.annualcreditreport.com. Now let's take a look at the range of credit scores and what's considered good. Typically, you will find different types of credit scores through your credit monitoring service. Sometimes they're called Vantage, sometimes they're called Plus. But the scores that lenders use most commonly is called FICO scores. And these are the ones that we look at when we evaluate your loan applications or credit card applications. The range of FICO scores is from 300 on the low end to 850 on the high end. If you look at your handout, you will see that approximately 67% of Americans have average FICO score of 670 and above, which is considered acceptable or good. But in order for you to obtain the best offer on all types of financial products and services, I would highly recommend you to aim for a FICO score of 740 and above. With that, you should be able to obtain the best interest rate and best offer. So when do you need to monitor your personal credit? As I mentioned earlier, you should do that at least once a year. But if you sign up for free credit monitoring services, you will be able to monitor it at least on a monthly basis, and you will be notified of any changes or updates on your credit reports in real time. Now let's look at ways that you can manage your personal credits. First, we need to know some of the factors that affect your credit score. The first thing that affects your credit score is the length of credit history. That simply means how long you have had your credit established. And this is why it's the best for you to establish your credit as early as possible. The second factor that affects your credit score is the credit limit and usage of your personal credit. For example, with every credit card or line of credit that you receive from a lender, you typically will have an upper limit, and that would be reported on your credit report. Your average usage for the month would also be reported on the credit report. What you want to have is higher credit limit, but with usage of no more than 50% at all times. If you need to use your credit to the maximum occasionally, that's not an issue for most, but you do want to be able to pay it off as soon as possible from time to time. And the reason I mention that is when you have a maxed out credit reported on your credit report with very little available credit, that would actually affect your credit, your FICO score significantly in a very negative way. And you do want to avoid that. The third factor that affects your FICO score is your payment history. You will want to make your payment always on time, if not ahead of time. Good repayment history over a long period of time will boost your FICO score significantly. And then, of course, there's also types of credits that was mentioned earlier. You have term loans, line of credits, secured and unsecured. You also have mortgages, home equity line of credits. Lastly, the last factor that affects your personal credit is the number of inquiries. And this is why you want to monitor your credit reports from time to time and pay attention to the number of inquiries, because excessive amount of inquiries on your credit, typically within 30 to 60 days, would actually have a negative impact on your credit report. Now, what happens if you are in a difficult situation, perhaps due to the pandemic, and you're unable to repay the debt? What can you do to repair your credit? I think the first place you can seek help is local nonprofit organizations such as PCR. Most nonprofit organizations would offer credit counseling. They sometimes have government subsidies that could help you through the challenging times. And from time to time, they also offer job or financial fitness training classes that you can take to help you manage your personal credit. What you want to avoid are the ones that advertise online or newspaper claiming that they could repair your credit instantly. These are the companies that you want to avoid. And a lot of times they may be predatory. And the third thing that you could do is you can go back to your creditor, whoever you owe the money to, and negotiate with them to come up with a new payment plan. A lot of times lenders are very open to making modifications if they realize that you're unable to repay the debt. You could also ask for deferment and also debt forgiveness. I also want to mention that just in case, if you are the one who are somehow victimized and you suffer from abusive practice from the lenders or from a debt collection agency, there are consumer protection agencies that are here to protect you and your right as a borrower. You will find these on your handout. There's FTC, which is Federal Trade Commission. There's also California Department of Consumer Affairs, and also California Office of Attorney General. These are the departments that you can contact and file complaints and to seek help. A lot of times they will help you to correct the issues. So now let's take a look at what are considered derogatory records on personal credit reports. The first thing, which is the most common, is late payment. Typically, creditors will report late payments to your credit bureaus within after 30 days. If they do not receive your payment within 30 days, they typically would report it the second month. There's also charge-off and debt collections. And these are unpaid debt. And for example, when a bank determines that it's impossible for them to collect the debt from you, they will typically charge off the debt and they will send your account to collection agencies. And these are typically reported to credit bureaus when creditors charge off your debt. There's also judgments, and these are basically a legal claim issued by the court to a creditor for them to enforce repayment of the debt. Lastly, there's bankruptcy, and there's Chapter 7 and Chapter 13. So how long does derogatory credit history stay on your credit reports? Typically, they will stay on your credit report for 7 to 10 years. That is a very long period of time. And that's why you want to really be on top of monitoring your credit and maintaining a good credit. Now let's take a look at lenders' perspectives on personal credit. So what do lenders look for when they consider your loan request? The first thing we're going to look at is your ability to repay the debt. We're going to look at your income, your work history, and also the type of work that you have in terms of industry. The second thing we're going to look at is what Lou mentioned earlier, that's character. We're going to look at you as a person, and we're going to consider the references that you provide when you submit your loan application. The third thing we're going to look at is the amount of your liquid assets and other types of assets that you have on hand. Then we're going to look at whether if you have collateral. What that means is whether if the credit you're requesting involves any type of security. For example, a mortgage loan is secured by a house. And when it comes to credit cards, there's secure and unsecured credit cards. A secure credit card can be secured by your bank account. And lastly, a bank would typically consider the local market condition, economic outlook, and also the impact of, for example, COVID-19. Now I'm going to turn it over to Lou, who's going to explain the connection between personal credit and business credit.
Okay, Tracy, thank you very much. I'll try to keep this segment short, so get your questions ready. So I think the big message here for smaller borrowers is that business credit and personal credit are really closely linked and pretty much one and the same. You know, they definitely both need to be good. If one has a problem and the other doesn't, typically one will not overcome the other. In banking over the last decade or so, the analysis that we do is increasingly called global analysis. What that means is we look at the business as well as the owners of the business essentially as one pie. And we add together your debts and your payments, and we look at them as one. So it's really a combined analysis. And in closely held businesses, there is a fine line between your business and your individual. So that's, we definitely look at the full picture. So the last thing I kind of want to talk about, and we talked about this a bit when we talked about credit cards, is use of personal credit card for business purpose. That's something you all are going to use. You know, it's maybe not the most desirable, but as an emerging business, it's just something that happens and is certainly very necessary for younger firms. So, you know, I think the message is if you do need to use your personal credit for business purposes, keep track of it, try to keep it, you know, not too extended, and try to do it on an arm's length basis. One of the things as a lender, if we get your business balance sheet and we see 5 or 6 personal credit cards on there, it can kind of send a message. You're going from kind of place to place, trying to keep the ship afloat. And sometimes those will be double counted, both on your personal and on your business side in that global analysis that I described. A good practice is, instead of putting those personal credit cards on your business financial statement, is to reflect it as a loan from you as the owner, which shows your commitment to be the first creditor to your business, and actually have a promissory note that the company owes you the money, and then the underlying debt may be the personal credit cards, and that way it won't get double counted. So again, it's something that's necessary, but again, something to kind of manage, and hopefully you try to reduce those as quickly as you can. So that's kind of the end from what we've had to say. So we'll turn it back to Colette, and we'll look forward to questions and really how we can relate some of this general material to your specific businesses.
Thank you guys so much. And we do have some questions. So Aja Beer, who's actually one of our Restaurant Academy advisors as well, is just happy to learn about the diversity program. Her question is, will debit cards linked to a business bank account that have an MC logo help build business credit? This is for What is the MC logo? Will debit cards linked to a business bank account that have an MC logo help build business credit? What's
Master,
that, Asian?
MasterCard logo, like the Visa, MasterCard.
Oh, like a
Chevy,
MasterCard.
yeah, Chevy actually sent me the answer to it, but in case anybody else wants to know, if the bankers still want to share their answer.
Yes,
Well, I
can,
guess I can
go ahead,
I
Lou.
can try to take a stab at that. So typically when you're accessing a debit card, you're accessing, your own money. So does that really build credit? Not so much. But what it does do, it shows you're part of your building your banking record, that you're responsible. The debit cards will, in some cases, create overdrafts. So as long as you handle it correctly, it's part of building your record. And we're increasingly becoming, fewer checks, and it's a convenient way to do things. So it doesn't really build credit, but it shows, organization and sophistication within your business, I would say.
All right, and Martell is asking, are there any programs beyond the 250,000 limit available? This may be to the program that Wayne had mentioned. Is it possible to leverage SBA lending to refinance existing commercial loans? So two different questions there. Programs over 250, and then also leveraging SBA lending.
Okay, I guess I can take a stab at that too. So I'm not sure where the magical 250 number is coming from. I guess that might be kind of a distinction between smaller loans and larger loans at many banks, and kind of how they're evaluated. But yeah, I mean, we do loans here anywhere from 10,000 up into the tens of millions of dollars. So there's nothing really magical about the 250 level, really. It's just you're probably going to need to give more information and more detail as you get into larger loans. SBA is something that everybody should really be looking at today, along with the state guarantee program that PCR administers. It's extremely attractive today because as a result of the CARES Act, there are no guarantee fees, and the guarantee to lenders is much higher now. So it's more attractive for banks to use SBA. So SBA loans can be used to refinance existing debt, to give you a longer term, to lower your interest rate, to consolidate things. So that's definitely something that, if you have some existing debts and you have not borrowed before, SBA is sort of the gateway to getting started, because the government kind of stands behind you as a guarantor and makes it easier your first time. And you can get a little bit longer and a little bit more flexibility with SBA. And particularly in these difficult times, that's when those programs become important. So definitely, for many of you on the call, we definitely advocate looking into SBA.
Great.
Uh,
Great.
Lou, let me add,
Go ahead.
a little bit more to that. The special purpose credit program is really targeting women-owned businesses, minority-owned businesses, and veteran businesses that traditionally have had difficulty having access to credit. So this is kind of a gateway to having credit available for that particular population. But for those other businesses within that population that have access to capital, certainly they will be eligible for all of our programs that we offer, going beyond the 250,000 limit that Lou mentioned. So if you typically qualify as a business banking client, then there's no limits to what you have the ability to apply for. But for those who have had difficulty getting access to credit, then that program is going to be designed for those populations to have the access, because traditionally over the years, they've had difficulty having access. And what we are going to be doing is we're going to have a little bit more flexibility in our underwriting so that we can at least have those business owners have the opportunity to get the credit they deserve.
Okay, great, thank you. And Martel's also asking, what's the Santa Clarita affiliate for California Bank and Trust? What's the name of that one?
Santa Clarita. Well, we actually have what we call a loan production office right in the heart of the Santa Clarita area. And we have two bankers in Santa Clarita that do nothing but business lending, real estate lending, commercial real estate lending, all types of lending. So it's a loan production office. It's not a typical branch that you can walk in and make a deposit. But if you are in the area and you need someone that you can contact, then I can send that information over to Collect, and she can certainly give out, the contact information, the phone numbers, et cetera, if you really want to have a conversation and sit down with those bankers.
Okay. All right. And Kevin says that he was furloughed due to the pandemic affected ability to stay current on debt. Should he consider a consolidation loan to get caught up and lessen the impact to my credit rating? Go ahead, Tracy.
I think, Kevin, I think in this particular case, I think your best option will be to first go back to the lenders, the existing lenders, and then try to negotiate a repayment plan. You can definitely consolidate all the debts and lump it into one loan. But if these debts are on their business, you can do that through SBA programs. But if these debts are on the personal side, meaning their credit card debts or line of credits that's under your social security number, then you may end up with a higher interest rate if you consolidate all your existing debts into one loan. And that's probably something that you may want to avoid.
Thank you, Tracy. Great. And then Bridget's asked, how are banks reinventing their relationships with customers in response to competing with fintech and other smaller businesses?
I guess I could take a stab at that. Banking has historically been very traditional business. And like I said earlier, banks account for a smaller and smaller part of overall business credit. We've got all sorts of private lenders, we've got credit unions, we've got all sorts of funding sources, and that banks are increasingly looking at ways to change our delivery systems and to make credit easier to apply for and more available. And our diversity program that Wayne talked about is certainly a byproduct of that. But because we're regulated, because we loan depositor money, we're always going to be a little bit clunky. And some of these lenders that don't have those restrictions can sometimes be more flexible. But we are, as an industry, trying to use technology and digital platforms more and make it easier. And that's, I think, part of why we want to, do programs like we're doing today, is to answer questions, help educate, help you understand the alternatives. Sometimes the bank is your best source, and sometimes these other lenders are better. And organizations like PCR also provide great counseling and can help you, in the vast array of lenders, find the one that's right for you. That's really the key.
Great.
Also, Lou, can I add a little bit, Colette? As far as reinventing ourselves, the bank, our parent company, has spent tens of millions of dollars in technology to make the loan process easier and to also make loan decisions come back faster, because we had to be more competitive with the other lenders that you mentioned. Otherwise, we would be out of date and be in an industry at a disadvantage. So we're trying to make it faster and faster and faster. Where you come into the bank and you want a loan and it's Monday, you want a decision by Wednesday, that's possible.
Yeah, that's really great, because at the start of the PPP, Wayne, that was one of the challenges that so many of our small businesses had, was the fact that, they couldn't either get into a lender, and then the process felt very clunky. And so we do know some of our small businesses that had easier cases were going to the fintech, but more difficult cases, we found that fintech wasn't quite as helpful for our small businesses. So if you needed to speak with somebody to be able to explain things, the fintechs were not quite as helpful as those where you could actually, talk to a live person if you needed to. So thank you for sharing.
Maybe Lou or Tracy can give a real life example of a PPP customer that knocked on our door that actually had a banking relationship somewhere else because their current bank didn't have the time or the resources or the interest in helping them. So they actually came to us. They weren't a bank customer. And maybe Tracy and Lou can share that experience and what happened next.
Yeah, we've definitely, had a number of those. And I think to speak to that situation with some of the online lenders, some of those were absolutely great for very simple situations, but we had a number of cases where people were, more complex PPP loans. They got lost in the shuffle with some of these online lenders, and literally customers were not able to get people on the phone. And that's definitely where our strong suit as a relationship type bank lies, and that we could really talk to people. We answer the phone, try to understand why their loan got stuck and what needed to be customized. And we were able to have some real success stories. But again, those lenders played a vital role in being able to do simple automated loans quickly. But, really there's always a need, particularly as your business grows and gets more sophisticated, is having that one-on-one personal attention in that relationship. And that's really where lenders like us, come into play and add value.
All right, great, thank you. So this is a question from Miriam. Does a business credit card that was granted based on personal credit continue to affect the FICO score? And if so, how?
Yeah, well, like I was saying, the two are, particularly for smaller things, are very much linked together. So a business credit card is going to take your personal credit into effect in the decisioning process, but the handling of a business credit card typically would not go on to your personal credit report unless it was joint or something like that. So if something were to go negative and it hit, a collection or a judgment or something that would be picked up, in the evaluation process, it builds your business credit, but it wouldn't typically go on your business credit card, would not go on your personal credit report typically.
Okay, so separated then mostly. Okay. And then Bridget's asking, is it necessary to register with DMB from a banking perspective? Is that required for lending from you
I
all?
think, generally, if you're a business of some scope and, you're licensed and, with you're registered with the state in some way, they're going to find you and knock on your door. But if they don't, you can certainly knock on their door and, give them the information and get in their database. Like I said, many people will use a DMB to get to know you and inquire. So it's in your interest to get in the database if you're not, and for the owner to take the initiative to look at the report, if there are some errors, correct it, and talk to the rep so you have what you'd like to see about your business on the record.
Oh, great. And it's really funny, DMB was required for a few grants that were done, particularly the SVOG grant that's open now for the shuttered venue grant through the SBA. That one did require a DMB account. So I thought that was interesting. That was one of the few that did require DMB. And Lou, you shared earlier that it really helps your suppliers, even though the bank uses it, but suppliers, that's a big tool for them. So, All right. And then Bridget was asking, what reporting agencies do most banks use other than DMB? And I think Tracy had spoken to that a little bit. And are consumers able to access these reports?
I think generally speaking, other than DMB, for most banks, they also use Experian business credit reports. I don't think consumers have access to it, but I would think that one thing that you could really do is to make sure that all your payments are made in a timely manner, because the first thing that we're going to look for is your trade credit and how fast you paid off your trade credit, your suppliers, when we compare you to other business owners in the same line of work.
Mhm.
And there are actually industry reports that gives you a glimpse of what the average number of days is. And what happened is, if you always if you try to pay your suppliers late so that you could have additional cash flow for your working capital, if that ends up being reported on your credit report, the business credit report, we will be able to see that. And when we compare that to other people in your line of work, we will also be able to see that.
Thanks for sharing that. I think we forget about industry comparisons sometimes. Okay, so one question here, are free credit monitoring services comparable to LifeLock? I think they're different, but
I think there are different type of free credit monitoring services offered by banks, financial institutions, or credit card companies,
Mhm.
and they all have different names. But you can identify them by looking at the description. It would always tell you that it's a credit monitoring service.
Okay.
You know,
And then,
just to add, oh, I'm sorry, go
oh,
ahead.
go ahead. Go ahead.
I was just going to say, you know, we get asked a lot about these type of products, and there's literally an entire industry around credit that's sprung up. And I mean, these things definitely have their place. I think some of them are costly. And I think that the real point is there's no substitute for doing things yourself and being on top of it yourself. And you can really save a lot of money. You know, you can get your credit report through some of these free things, or you can just request it from the three bureaus, you know, once a year and take a look at it. And if there's something wrong, you got to get in touch with the creditors. But, you know, to, I just think if you touch it and feel it yourself, it's going to be a priority and you're going to be more accurate. There's a place for these things, particularly for people that are busy. But, you know, I think most of this stuff, people can really do it themselves. It's just an industry created over convenience and over fear of, you know, things hitting your credit report. But it's really, it's common sense stuff.
Okay, and then also the annual credit card, creditreport.com. Thank you for sharing that. That is in the handout, because if you type that in, you're going to come up with all these other credit agencies initially. So you have to specifically look for that one that Tracy shared, which is the free credit report that you can get. So there are a lot of lookalikes out there in the industry as well. So I think the guidance in the handout was helpful. All right, we're going to take a couple of more. What is criteria looked at needed for a business credit card? So how does that differ? Is that
So yeah, you know, business credit cards can be very small, or in many cases today, businesses are paying more things on credit cards. We have a product called a commercial card that businesses can use to pay suppliers, which is really more like a line of credit. And those can go up into the hundreds of thousands of dollars. So smaller business credit cards typically will be kind of an application only type thing. And they'll be driven by some of those scoring factors that I talked about, like, you know, how long you've been in business, how long you've been with the bank, you know, what your balance is, what you say your other debts are. And it'll rely very heavily on you know, on the personal credit of the owners. As you get into larger business credit cards, perhaps 50,000 and above, that would be more like a traditional credit application with financial statements, tax returns, and that sort of thing.
Okay, and then here's one. We're going to take a couple more, then proceed, and then come back to questions. And I'm hoping that our bankers on the call we might need you for just a couple of minutes afterwards to answer some final questions. So this is one. If my personal credit card was issued for business, once paid off, is it safe to close those credit card accounts, or what's the safe way to close if no longer used anymore?
I can take that one, and I think it's probably the best for you to keep it open. And the reason is the credit history in terms of your open account and number of years that you have had the credit is one of the major components for your FICO score. If you close those accounts, they will be reported as closed per consumer's request. And although that's not a major issue, you will be missing out in terms of the history, the credit history that could really benefit you in terms of FICO score.
Okay, great. Great to know. I know that's always been a question. Should you close it, leave it open? What do you do with that? So thank you for asking that question. All right, and here's one from Rennie. We are building a large entity that will bring health foods to South LA, and we're in need of funding to buy the building and build it out. Oh, okay, that wasn't a question, Rennie. You need money. So work with your PCR advisor. I hear you though. Nothing wrong with putting that out there. So, okay. And I see some other ones there. Okay, question here. Rachel Day is asking, do I have more credibility as a corp or should I stay as a sole prop for business credit?
Doesn't really matter. I mean, those issues are more driven around kind of as you become bigger, there's reasons to become a corporation or an LLC that have more to do with, liability protection and stuff like that. But if you're pretty small, there's no reason not to be a sole proprietor. It's much cheaper. You don't have some of the fees that you would have as a corporation or an LLC. That's the kind of stuff, if you have a good CPA, they'll work with you and help you determine kind of when the right time to make that transition is. But there's certainly no penalty for being a corporation. And in fact, for being a sole proprietor. And we've seen many companies that figured out that they didn't need to be corporations, and they went because it's another tax return that you pay and you have to file. And where if you're a sole proprietor, you just file Schedule C and your personal tax return. We've seen small businesses kind of go back and become sole proprietors again and have their life be simpler. But not a one size fits all. Every case is different, and that's something where good CPA or the advice from firms like PCR will help you.
That's great. All right, so we're going to run a poll and we're going to put that up. There are 3 questions there. So we just do this very quickly. And Winifred, I see your comment about the EIDL. Work with your advisor. We do have our advisors that are helping with the EIDL, and we've had this issue of the multiple requests for the same information. We've been calling it the vortex. And so we do have our advisors can help you and direct it to another key advisor on our team that's getting those to the SBA. So please work with your advisor, send a note to info@PCR if you don't have it. So if you guys, and we can come back to some questions, but we need to share a little bit more information. Which of the following are forms of creditors? So please answer that one. You guys, 10 seconds. There are 3 questions here. The second one, what factors affect your personal credit score? I know you guys were taking notes, so please answer that question. And what do lenders look for when approving a personal credit application? So if all of you would please put your answers in. Thank you, thank you. I see them coming. Okay, keep going, please. 10 seconds. And I see your responses coming in. All right. All right. I think we are good. So this one, Briagini, I think we can end the polling and let's share some results. So the first one, which of the following are forms of creditor or creditors? And only 5% said banks only versus all of the above. So family and friends, banks and finance companies, yes, are the answer for that. What factors affect your personal credit score? And most, 90% said all of the above: payment history, credit limit, usage, and number of inquiries. Is that correct? Yes? Okay, so all of the above. And then what do lenders look for when approving personal credit application? Character, capacity, or campsites you visited? I don't think that's the one. Thank God nobody clicked on that one by mistake. And the answer is A and B, all of the above. The 5 C's, character and capacity, are 2 of those. So thank you guys for doing that. We'll come back. This is our team, and we so appreciate you guys answering so many questions. We still have a few more in the chat, so I'm going to go and take a look at those, but we're going to run prizes now. So all of you that joined the call, we have 4 prizes today. 1 book called Credit is King by Will Roundtree, How to Transform Your Credit to Royalty. And then a beautiful gift basket from the California Bank and Trust team. And there are 3 of those. So there are 4 prizes, and we are about to, let me find it. China sent me the link to spin the wheel so that we can have some winners here. Give me 1 second and I will, let me pull it up. All right, so for the first prize, let's see. Alan Fowler, where are you, Alan? Clap your hands on the screen so we can see you. Oh, we got a clap there. All right, Alan Fowler, I think you get the book. All right, next one is, the next one is Tyrone. All right, I thought you were going to slip into Catherine. Tyrone Gregory, there we go. Tyrone, where are you?
Wait, there's two Tyrones. I'll be more than happy to claim it.
No, Tyrone Gregory, not Tyrone Austin.
Tyrone is claiming his prize. I see you, Tyrone. Thank you.
For that clarification.
We got you. We got you.
Any confusion there? So thank you. All right. And we thank you guys so much for coming today. This one is Harry. Harry, you have won a California Bank and Trust basket. And then we're going to do one more. Come on, come on. All right. Boy, it looks like I spun it hard. I don't know if that works like that. Oh, okay. Catherine. Woo.
Okay.
You're getting me nervous there, Catherine.
Hey, awesome.
If you guys can put your emails in the chat, that'd be great so that we can connect and make sure that we have the right information for you guys to send it to you.
Yes, and the one will be sent directly to your home. The baskets will be sent, and I'm not sure, the book may be a digital one. So wanted to just remind everybody the handout was included. China put that into the chat already. It's a really great handout. I learned some things and from the group today. I so appreciate CBT for reviewing that. So please click on that link, China. If you can put that back in, that would be awesome. Yep. And then we are doing another business briefing or another workshop with California Bank and Trust. So we'll be doing these for 3 quarters through the end of the year. And we're so excited. The next one will be how to shop for and interview your bank. So Lou talked a little bit about shopping for a bank today. We're going to spend more time talking about that and what does that look like at our next session on July 27th. And that'll be again from 10 to 11:30. So we hope that you all will come because, you know, I think the one thing on the pandemic has showed us, you don't have to stick with who you were with if you're not getting a service that you need. So here's an opportunity for you to learn how to better do it and how to find those relationships and how to create them. And so we're excited to talk more about that at our next session. And then there are upcoming workshops that you need to know about. One is Business Plan Essentials is today. Disaster loan training, we cover this every Wednesday at 1 o'clock, every Wednesday at 1 o'clock. And Trevor was our advisor that got us up and running very quickly to get all these programs out. And we're continuing to do this on a weekly basis. And it's never the same because there's always something new. So we encourage you to participate in that and check in on occasion as you are looking for funding sources, loans, and grants. As well. Launch your business PPP forgiveness. If you have not yet received forgiveness, this is an opportunity. Every Thursday, we are working to make sure that that PCR loan is a loan that with forgiveness becomes a grant. So make sure that it can become a grant for you and get help to do that. Commercial leasing checklist, and that was born out of people having so many problems with their commercial leases. If you are entering into a new lease, get some help, and our legal advisor, Harold Hart-Niebrick, is leading that. Marketing during uncertainty, that's Sahar teaching that, and Gary is teaching Disciplined Entrepreneur. Then our Restaurant Academy, we have Asia Beard and Celeste Young Ramos are doing these, and we are also so a lot of labor laws and effective management, business planning for your restaurant. And then we have added in the new Restaurant Revitalization Fund. That is the one being done through the SBA. It has not fully launched yet, but we will be training on how to apply. So we're getting all of that information now. So we hope that you will go to pcrsbdc.org for all of those workshops. If you have not been receiving our emails, please note that every Friday is Financial Fitness Friday. So you all are developing your financial muscle. And so every Friday we have a tip from one of our advisors or one of our banking partners like CBT. And CBT will be the next one on Friday. So and this is how to contact us, info@pcrsbdc.org. So let me check. We've got 3 minutes. We're going to go back and check just a few questions. Okay. Okay. This is interesting. Martell is asking, are payment history of utility companies reported publicly?
Not that we're aware of. I think the only time it would hit our radar is if for some reason it went to a collection status or resulted in a lien or something like that, that we might pick up.
Okay, that was interesting. How do you determine minority status here? So what is included in that?
That would typically be businesses that are more than 50% owned by either women, minority, or veterans.
Okay. All right. Thank you. I see some other notes in here. All right. Okay, you didn't see your name on the spinning wheel. Sorry. We try to get them in early. And then the link to the handouts. Yes, Alan, she just posted that at 11:23. So if you look into your chat, the link to the handout is there. So we hope that you will take full advantage of that. And okay, and Asia, your last question was skipped. I don't see it, except that you can cancel now your LifeLock because you're going to do it yourself. So that's great.
Oh, no, that wasn't it. No. I just wanted more clarity for, so for personal credit, I'm good there. But if, for myself and advising other business owners, if they want to build their business credit quickly, is the faster route to open up a line of credit with a bank or to get a business card and then just not use it? What's just like the next right step that they should do?
Great question. Thank you.
I tried to stress it's a process and it's a period of time. I think it's a whole lot of things. It's establishing credit first with your suppliers, getting those things on your D&B report. If you're at the stage where you're ready for bank credit, absolutely get a small line of credit, even if you don't use it. it's a positive. You know, you may need to request it cash secured if for some reason you're not qualified, but it still helps. Getting small business credit card helps. If you need to go the route through something like a program through PCR or an SBA program. But yeah, the more things, you know, it's just throwing darts at the board. The more things you get on your record and you handle them satisfactorily, those are all building blocks.
That's great. And I put a vision. I know Lou mentioned the kind of upside down triangle with the suppliers being your first start to make sure that those relationships are good and you're paying them, and those become actually a real good base for your line of credit in addition to the other things you mentioned. So we need a graphic for that, Lou, because I thought that was helpful.
That's important.
To understand the how that comes together. So maybe in the next one, we'll show that one again in terms of those building blocks.
Lou, you can call that the pyramid of credit.
Okay.
Yeah.
Yeah.
You know, because they're, you know, all too often it's not as complicated as it sounds when we say to build credit, because when you're building credit, you're actually starting from the bottom to go to the top. And too often people want to go to the top first and they want to go to the bank and they don't have all of the steps in between. So if you want to build credit, start at the bottom, what's simple, work your way up, go to the next floor, to the next floor, to the next floor, until you finally get to the bank. And then you're ready, because you can ask the bank for as much as you qualify for because you're ready.
Yeah. So that's great. I love that. The pyramid of credit. So we will share that with our team and then make sure to share that going forward. A great way to build credit. So I think that we are right on time, everybody. We thank you so much for joining us today. Thank you for California Bank and Trust for partnering with us, Wayne Ward, Lou, and Tracy. We so appreciate you guys and the work that you did to make this an awesome presentation and very informative for all of those that participated. So we look forward to you all joining us again at one of the other workshops, and then joining us in July for the next time CBT will be with us. So thanks, everybody. Have a wonderful day. Go get this money, get prepared if you're not, and get some help along the way. We're here to help you. Thanks, and have a wonderful day, everybody. Take care.
Thank you.
All right.
Bye.
Thank you. Bye.